What does this mean for the retail investor to start hearing potential big IPOs like this, like Uber, like all of these things that are coming at this point potentially?
I think it's great. I mean, one of the biggest struggles we've had in the market over the last few years is so many of these companies have remained private with, our clients and our competitors' clients not having an opportunity to participate at all in these great business models. So as these companies start to come public, and people can participate. You guys are here at the NASDAQ every day. The NYSE bets, they fight for these companies to go public all the time to give retail investors an opportunity to invest.
Here's my question, though. As a retail investor, do I want to buy into an IPO when its coming public has been so delayed that the funding valuations have gotten pushed up and pushed up and pushed up? Like, you're just much later in the game, which makes me think maybe I've lost all the potential big gains to the earlier investors.
Well, I think one of the mistakes that, unfortunately, I think people always say, if you'd have bought this stock today at IPO, look at its returns over 12 years. Most people don't do that. So it's kind of an unfair statistic.
But again, you're comparing that to IPOs where you hadn't seen the company sitting around for years and years. More and more
I agree with that, Becky. But what I would say, where I was going is, you don't have to be there day one. You can let the company play out a little bit.
But this
also,
is like day
well,
9,
this is day many.
2000 something,
yeah.
Whatever it is.
But I mean, day one of the IPO. It's your first opportunity to invest. So I'm saying you don't have to be there day one of the IPO. And the other thing I think you see people always do is confuse company and business. So you may love the product. Yeah. That does not necessarily mean you have to love the stock.
But there is, to Becky's point, JJ, there is a point being made that maybe retail investors, if they buy even on day 5 of the IPO or whatever, this is really year 7 of the company, right, or year 10 of a company. And so therefore, you're never going to get that big bang for the buck. And in fact, you are at a point where the big growth has happened. A lot of the major growth has happened, and you're not going to be able to take part of that initial wave.
And I don't disagree with you, Melissa, but the way the structure of companies is now and the way they get funded is much different than it was, obviously, 10, 20 years ago. So this is the first opportunity for retail investors to participate, which is why I think you guys are making a very valuable point, and that is because it's so delayed compared to the past, you have longer to really see what the stock does. How many of these new IPOs have we seen where first few days they're up, then they crater before coming back 6 months later? So I think that's the primary point. The IPO, I'm glad it excites people, and it does, and it brings new people to the market who weren't there before. But the problem is people rush in with both hands where it should be, maybe we should wait a little bit and see how these do.
Do you think we'll get the sort of ATM effect that we've seen in other past big IPOs like Facebook, where you liquidate funds and one kind of, let's say, tech stock to put it into a Lyft, or, I mean, a lot of these companies that are going to list are tech stocks?
Yeah, the one thing I would say to people is if you're going to do that, you might want to do it, think in partials. So if you want to buy a couple hundred shares and sell another stock, and if you own 300-400 shares, don't liquidate all of it necessarily. If you do want to take some profits in order to do this, and the other thing is go in with a little bit of a, okay, here's my downside. Everyone plans for things going up. Nobody plans for things going down. And unfortunately, that's where people get in the most trouble. And as I said, I think going in on day one for most people is not necessarily the best investment strategy because you haven't done enough research on the company. They haven't had to put things out publicly as much yet.
JJ, let me ask you really quickly, Leslie's point about the dual class structure. Are you concerned about that? Would you buy a stock that had a dual class?
Would I buy a stock that had a dual class structure? Yes, I would. That being said, it's also going to depend on my holding period. The longer I plan on holding it, the less a fan I am of that. If I have a shorter holding period, it's probably not going to affect me as much. What I would say is we're in an environment right now where people are excited to have an opportunity to invest in these companies, even with, as you and Melissa rightfully pointed out, perhaps a long delay in getting an opportunity. So I don't think the dual class structure is as big a concern for perhaps the retail trader as it may be for some of the bigger houses that are buying big blocks of this, and the voting rights matter much more significantly.